The importance of fundamental metrics when investing in stocks. When it comes to investing in stocks, it's important to do your research and understand the financial health and potential of the companies you are considering investing in. One way to do this is by analyzing fundamental metrics, which are key financial indicators that can provide insight into a company's performance and potential as an investment. In this video, we'll go over some of the most important fundamental metrics to consider when investing in stocks. First, let's define what we mean by fundamental metrics. Fundamental metrics are financial indicators that provide insight into a company's performance and potential as an investment. These metrics can be used to evaluate a company's financial health, profitability, efficiency, and other key factors. So why are fundamental metrics important when it comes to investing in stocks? Fundamental metrics can help investors to understand a company's financial health and potential for growth, and can be used to make informed investment decisions. By analyzing fundamental metrics, investors can gain a deeper understanding of a company's financials and determine whether it is a good fit for their individual investment goals and risk tolerance. Now, let's go over some of the most important fundamental metrics to consider when investing in stocks. Earnings per share, EPS. This is a measure of a company's profitability, calculated as the company's net income divided by the number of outstanding shares of stock. A higher EPS is generally considered a good sign, as it indicates that the company is generating a higher level of profits per share. Price to earnings ratio, P/E ratio. This is a measure of a company's valuation, calculated as the company's stock price divided by its EPS. A lower P/E ratio may indicate that a stock is undervalued, while a higher P/E ratio may indicate that a stock is overvalued. Dividend yield. This is a measure of the income generated by a stock, calculated as the annual dividend per share divided by the stock price. A higher dividend yield may be attractive to income-focused investors. Return on equity, ROE. This is a measure of a company's profitability and efficiency, calculated as the company's net income divided by its shareholder equity. A higher ROE may indicate that a company is generating a higher level of profits relative to its shareholder equity. Debt to equity ratio, D/E ratio. This is a measure of a company's financial leverage, calculated as the company's total debt divided by its shareholder equity. A higher D/E ratio may indicate that a company is taking on more risk and may be more vulnerable to financial distress. It's important to note that these are just a few of the many fundamental metrics that can be used to evaluate a company's financial health and potential as an investment. There are many other metrics to consider, such as cash flow, return on investment, and more. It's important to do your own research and seek the advice of a financial advisor to determine the best metrics to consider for your individual investment goals and risk tolerance. So how do you access fundamental metrics? There are several ways to access fundamental metrics for a company. One option is to read the company's financial statements, such as its annual report or quarterly earnings report. These documents typically include key financial metrics such as EPS, P/E ratio, and more. You can also use financial websites or tools to access fundamental metrics for a company. These websites and tools typically allow you to search for a company by name or ticker symbol and provide access to a wide range of financial metrics and data. In conclusion, fundamental metrics are important indicators of a company's financial health and potential as an investment. By analyzing fundamental metrics, investors can gain a deeper understanding of a company's financials and make informed investment decisions. It's important to do your own research and seek the advice of a financial advisor to determine the best metrics to consider for your individual investment goals and risk tolerance.